Bitcoin price is dropping. It's fear, it's panic. It's not. If you take a bit more energy to click on that daily chart, this is what you see. You see that the reality is different. The price is still at decent level inside a macro pattern, which we have been playing out for few months. If you have a bit more energy, you click on that chart, 3-day chart, and Bitcoin shows you the trend line is to the upside. The price is following the trend line, a bit to the upside, a bit to the downside, but it is following that trend line. And if you are focusing on what the market is showing you, now you are like, okay, fine, I understand. The market is giving me some clear signals. And breaking that down is a bit more easy part, where it shows you higher lows, So the market is trying to signal something. Say you don't trust those, then what are you looking at? Just use the 3-day chart with a moving average, say 21-day moving average. When you tried breaking it out the first time, you got rejected. But then as soon as you broke to the upside, you had a retest. Then you bounced off. So you tested that, you got rejected, you broke that to the upside, now you're retesting. So that micro trend line pushing the price back up will look like this phase in Bitcoin. Welcome to the scientific investor family, where the normal retail guys get to learn how to become the next top 10% of this world. We talked about the possible drop, and the price did drop. Now, if you look at the market, it does give you further idea that the support which you should be watching is on a short term horizon. So you can use a hourly chart, you can use a 4-hour chart, whichever you like. The price action gives you the idea that this trend line, which is acting as a support, is your primary level of support. Now, you do have micro levels to watch out for, and that's exactly where the price is at now, which kind of gives you a clear idea that if you think the price is about to break to the downside, now you're watching for this level, 63,400. If the price retests that and get rejected, yeah, it's coming to $61,000 to $62,000 range, and that's exactly where you want the price to bounce off. On a macro level, when you come in, you understand that this will give altcoins some room to bounce. So then you take the altcoin market. If you want to pick a particular asset, you can, but understand the fact the market gave you this clarity. This is dollar on a macro chart showing you it's slowly breaking to the downside, trending lower. Now, why should you look at dollar? Easy part here is it gives you clear history. If you go back in time, check each and every date of these fluctuations, it gives you an easy idea. Let's break that down. So the moment you start breaking things down, it looks like this. Dollar showed you it's making a new low in the RSI, which you can see right now, it's happening. But the price didn't form the bottom. It had a bounce, but that bounce was resisted by a trend line. So we should be expecting something like that, a bounce to get resisted around 102.5. Then you go lower, but the RSI should argue at that point, now I'm building a bullish divergence. A hidden bullish divergence or bullish divergence is fine. Now look at those dates. You can actually see July, August 2020. Then you can see the bottom on December 2020. Then you can see the final bottom on May 2021. Why are those dates important for us? You go back and you see, August 2020 towards December 2020, crypto market doubled. It doubled while the dollar dropped 5%. Then it consolidated there from December to May, June. So from December to May, June, it didn't move. Dollar was just up and down in the same range, but crypto market from that point went up 5x. So if you take the total run up in that fluctuation, that was a 10x plus move in crypto market, while the dollar made its divergence, saying I'm about to go back higher. Fine. So you're looking for this breakout, all this move, and then a ride to the upside. Now, if you have confusion, say instead of just comparing the bottom, compare the top. While the dollar was forming its local top, which is October 2022, towards November 2022, what do you see in crypto market? You go there and you see this. October 2022. That's the range where crypto market was trying to form its bottom. So dollar was trying to form its top, crypto formed its bottom. Dollar broke lower and continued lower, crypto went up. So you now clearly see which direction this is going. And that means when the crypto market highlights the fact that there is a trend line evolving, there has been a couple of fake outs for sure, but you're respecting the trend line, that clearly give you an idea, okay, dollar is going to bounce here to test this range. Crypto is going to bounce down to test that range. And then most likely dollar is going to get rejected to the downside. And that's where you should be expecting the big blow off in crypto. This is what the comparison with dollar to altcoin market gives you. This is not alts excluding Ether. This is including Ether. So you see a lot of bias towards Ether chart. You can go in and remove Ether from that equation and then look at the price structure. But it's almost similar. And it also gives you a clear pattern that you kind of get rejected below that trend line, above that moving average, or flirting with that moving average couple of times. So you do get to see one attempt, another attempt getting failed. Now, if you look at the moving average being tested, right now you have a couple of them in front of you, which is great. You go back, you break to the downside, then you come back up, retesting that trend line. So the total altcoin market and the altcoin segment kind of shows you, okay, it's fine, don't panic now. But remember, dollar to crypto shows you the crypto market needs to make a bottom. Now, say you're a pattern guy, you're looking for these kind of fluctuations. What are you looking at? This can be a right thing. Inverse head and shoulder can be a good pattern to form here. You can come back down to test around 500 billion and then bounce off. So if you take assets like, say, XRP and look at what the price structure is showing you, the idea that the price can come back down to these trend lines are still valid. It's very much valid. Now we look at the price to the volume ratio. This is your candle, a 3-day candle which closed. This is your volume. So compare that with the current 3-day candle. It argues you have much lower volume in selling, but you have a bigger price action in selling. Buyers are turning out to the windows, or sellers are doubling down. But most likely, it's the resistance, smart money, those who are trading this market, they're stepping back out because they want to buy this close to this support or at this support. Whichever the case be, you kind of understand which direction the micro is going to go. Then you'll zoom out to see, if that's what the micro shows me, does the macro change? And that's exactly where you say, nah, it looks completely fine. You fake to the downside, you go up, test that resistance, come back down, start moving up. This is going to be the technical structure, a textbook pattern, which you may see. Now, a breakout may not directly reflect in a retest sometimes. We've seen that over time. But yes, for some assets which we were following, we saw that it broke higher. It got rejected at a temporary line. Now it's coming back to retest that range. So there is a lot happening. So when you go on a 4-hour chart, maybe it's just a retracement. 0.98, 0.99, it may get rejected back down to make a bottom. But a bounce here also gives you a trend line. So while the market is choppy, you may expect something like this while you're still in that pattern. So the micro moves in the market can confuse us. But when you take that micro move into the bigger picture, the macro, now your understanding is clear. Say you look at the 3-day chart here for Bitcoin and you're like, okay, it's kind of at that territory where it says, I want to test the bottom, which is 61, 500, 62, 61. It's okay. That entire range is going to be a support zone. You go on a daily and you're like, okay, the price is actually shifting lower. It's pushing lower. How low should it come? To the trend line. That's good. 61, 62 is fine. So while you follow the market every day, it can be boring. Sometimes it's so boring, people say, nah, I'm getting out of the market. And then the price drops or pumps. That's where you expect volatility, when the majority don't want to participate in the market. Now you watch some of these altcoins trying to push higher, but not all of them. Few are going up, kind of random assets, but then you see most of them are dropping. So the micro trend is that direction. But you then look at the assets which are dropping, they're like 5%, 8% in general for the week. And then you look at the assets which are going up and you see, around 20% is the average for last 1 week where the price is going up. When the price is going down, the average is 5%. So you kind of get the trend. If you don't understand that trend, you go on a 30 days. You're looking at this and saying, in a month, the average is like 78%, 7 to 8% to the upside. But these assets have already dropped 20%. So in a month, you're still trending down. So you go on a quarter. You look in the macro picture. 20% to the upside, but 50% to the downside. That's exactly where the 7-day picture comes in. You're trying to go back up. On a yearly, these assets are going back up. But on the quarterly or a 30-day show you last 3-4 months, they gave you enough pain, but now they are reversing back. Now they are starting to go back into their macro trend. That's why this chart is so important. The macro trend line. You fluctuate above it, sure. Below it, sure. But that's the opportunity if you're a bull. When you're above the trend line, if you're a bear, fine, you go short the market. If you're a bull, you want the price to be below the moving average, below the trend line, and a reversal signal. That's which you're watching. As soon as you get that, you go back in the market. The market is not that easy. If someone says it's so easy, either they don't know the market or they're lying. Or they have been in the market for 10, 20, 30 years and they've mastered what they're doing. So it feels like it's easy for them, but when they explain it to a normal guy, it feels like, that's complicated, right? So that's how the market works. That's one of the reasons I say you come into the market, try breaking things down, and you kind of get to see there is a lot of similarities being formed towards the 2023 September range. You put that on a weekly chart on the Bitcoin side because this kind of dictates what the market does. When the price was below the moving average and was getting rejected, not everyone was looking bullish. But as soon as the price broke back up to retest this, a lot of people went on shorting. But then they got liquidated. So expect a move like that. The price drops a bit, which attracts a lot of sellers. Then the price go back up to the resistance, which attracts even more sellers. And then the price continue to liquidate them. That's a bigger possibility in the market. So while we do that, while the Bitcoin goes up for the wave 3, you will see a ton of these altcoins bursting through. And if you want the right updates, whether it's to the downside or to the upside, the opportunities, you can follow the Scientific Investor family using this link in the description below and get all of those calls at the right time for the right assets and do a one-on-one session with me. Go through your portfolio, get my thoughts on how you have aligned your portfolio for this coming run up. And if you received value, guys, smash that like button for me. I'll meet you guys on the next video. Bye for now.